Thanks for watching our Forex blog post for September 13th, 2011. If you notice a weird hum in the background, it's because I built a stand-up treadmill desk, and just for energy and weight loss and health reasons, walking while I work most of the day, only a mile an hour. So starting today's blog, we want to buy the strong currencies versus the weak, and we want to sell the weak versus the strong. We have the real-time Forex Trend Pro, which is a combination of 5 of our tools that measure trend direction. Three measure trend direction, and 2 measure the intensity of that trend. So anything at or above this dotted white line shows extreme strength if it's green and weakness if it's red. Underneath that, we have the intermediate time frame trend. Basically, your highest odds trades are when all these line up. You have extreme weakness followed by intermediate term weakness. Underneath that, we have the daily, weekly, and monthly trend. You can see the weekly and monthly trend are up. So while the dollar was weak earlier, you start to see some strength coming back in here at 3, and all the time frames line up. Also the yen, a lot of strength at 12:30 here across the board. You'd be looking for yen trades from that time frame. And so we have some strength coming in the dollar at 1. The daily trend had shifted down, but it was strong yesterday, and the weekly monthly trend is strong. Also the same with the yen. The euro was quite strong weak from about 130. So basically you're looking to sell the weak euro against the strong dollar from 130 onward. Here's 130. The market falls down. We get a nice little push back up to the previous day's high where it finds resistance, and then it proceeds to fall 125 pips. Notice from about 2 to 4 o'clock here. One of the new tools we just released this week, which I'm going to showcase in our blog, and we go over it in depth in our classes, is a build your own trend tool. What this allows you to do is create and take all of our different statistical tools and add them to any time frame chart you want. In this case, the 6 pips per bar range chart, and it uses 15% weight of our trend candles statistical tool that uses 5-minute data. I use 15% weight on the 15-minute, the power index with a 15-minute 20-period average. This is another tool that I describe in our other class. Fisher percent, give that 15%. ADX trend, which is an intermediate time frame trend, give 15%. It measures the intensity, and so does a Momentum Pro. The intensity components of this measure 45%, and the tools that measure the direction that the currencies are going in measure about 55%. So you can see on the range bar chart, from 130 onward, you were looking to sell this. It had a little bit of a spike, trending up, and then it started to go red again. And notice it stayed red pretty much the entire time on the way down. If you miss this first trade here at 230, you have this nice little sideways rectangle pattern right here. To go short, you can see it fell about 20-25 pips. You have this trade here, and then my personal preferred trade is after you have a strong trend like this, wait for a pullback. Was there any strength in that pullback? No, insignificant little speck of green. So you have a 50 or about a 20 pip pullback. It goes sideways. You wait for it to break down there. Your stop's right above the high. You're not even risking more than 8 to 10 pips. And like most of the time that we do, when you go short, you want to draw your fibs off the previous swing. And the Fibonacci profit target does a phenomenal job of getting you out. So you're short around 20, out at 60. That's a nice 60 pip profit. And you had some smaller 15 to 25 pip profits before that. And this is using our own build your own trend tool, which you can, there's literally millions of combinations on that, because not only do you get to adjust the weight on all of these, there's 11 different tools in here. The bottom 2 measure the intensity of the trend, and the other ones measure the direction. These are ultra fast, and they oftentimes can flip to a new trend direction 1 or 2 bars before the real move happens. So I wouldn't weight these too high in your results, but they can give you an early warning of a possible reversal, and that's why I include them in here. 3-line break is a little bit slow, so don't use this on anything longer than a 30-minute time frame, because it's going to switch direction too late. It could take an hour and a half to switch direction on a 30-minute bar. But you can see very effective here today in selling the euro, and later in the day today you can see the dollar became pretty weak, And really from, at 4 o'clock right here, the intermediate time frame trend was down, daily, weekly, monthly's down. But at 5:30 right here, the intermediate shifts up pretty strong. And soon after that, the daily shifts up. So from 6 o'clock onward, other than from 8 to 9, you have quite a bit of strength here in the euro. So let's scroll forward in our range bar chart and look at it after 6 and how you could, buy the strong euro against a weak dollar. All right, so here's 6. You can see incredible strength. And notice also, this was in a downtrend, rallied up, didn't really have that much strength on the way up. This little wave right here had some strength. But on this pullback right here, the weakness is gone. So you had it really about a half an hour heads up that this was likely to go up just based on the previous swing moves. That's the main way I use this tool and all of our other statistical tools. If on the way up or way down we have a lot of weakness, and on the way up there's not that much strength, we want to sell it. If you see it go up with a lot of strength, it's less likely to go down. You could still sell it here and hope that the weakness returns, but if it doesn't, you get out of your trade with a small profit or a break even, and you look to flip when it breaks out right here. So you could have actually got into this trade at the very beginning of this move, and as this thing's starting to go up, you see incredible strength right here. You can buy these little dips, catch 5 to 50. Actually, these are 20 pip moves right here. Some quite big moves. And you always want to draw your fibs on the first wave. Usually, if not in one big wave up, it will work its way up to the fib target. Notice this pullback right here. A little bit of weakness, but not nearly as much as we had some strength earlier. Remember on the currency meter, you can see from about 7:30 to about 9, there is some weakness coming in. If you bought this pullback, you can see it went up to this fib area here. You're out with about a 20 pip profit. 7:30 to, or what time was it? Yeah, 7:30 to 9. We're coming up to about right now. It has some weakness. And there's your drop. But notice all from about 6 o'clock onward how many waves up you could have caught, and most of the moves were 10 to 30 pips each. Now 7:30 to 9, it was weak. So we have about another, or actually maybe 8:30. All right, so here it's starting to get strong again. You might buy this breakout right here. Maybe you lost money on that one. You buy this pullback right here. Notice extreme strength on the way up, nothing on the way down. You get in with a 6 pip stop, and you would have got out of that with a small profit. Didn't break this low, and it had less weakness on the way down than on the way up. Wait for it to break out over this trend line or over that high. You wait for it price to go above the trend line, you put your stop right below the low. So you'd be long, stops underneath the low. There's still some weakness here, so you might get out of that trade with a small 3 or 4 pip loss, not wait for your stop to get hit, because it's still, you want to get into a trade and see the green come back. You can always buy again. All right, so if it breaks out through 36.60, you're getting back in this because the weakness has disappeared. All right, you'd be long with your stop. I probably would put it at 36.48. 10 pips is enough. Anytime you get into a trade and it goes a little bit your way and pulls back, if your stop was underneath there, you want to tighten it right underneath that little swing low. And you never know if it's going to go above the previous swing high. 36.80 could be resistance, and the last swing high was up here around 3,700. Looks like we're about to get stopped out. Not yet. No, we're still in, and I would exit half the trade here, but this is extremely strong. Any reading way over 80 is extreme strength. All right, I'd be out of that trade there. Wait for a little bit of a pullback. Hopefully there's no weakness in the pullback, which there isn't. As soon as it goes above this little swing high, one more pip up, we're in. Boom, we're in around 36.78. Strength is coming back. This is, running into some resistance up here. I'd exit half and just lock in, 8 or 9 pip profit on half, and get out of the other half here. But you can see this tool is very effective in letting you know if the momentum moves up have a lot of strength and the pullbacks have almost no weakness, it's very likely to continue that trend.